I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is April 13th.
And we've got some good stuff we're going to be talking to you about today. So we're going to talk about home prices. We're going to talk about the supply in the Phoenix area. Where's it going up? Where's it going down? We're also going to hit on seller concessions and talk about mortgage payments. What do they look like in a couple of the cities? And then lastly, inflation information.
And remember, this is for informational purposes only. This is not financial advice. So stick with us. We're going to go through a lot here. I think you're going to like it. All right. So since January 2023, this is from the Cronford report. And Tom, we're really showing the price per square foot and how it's increased from about $264 a square foot. And now it's up to about $278. And a lot of people don't look at it per square foot, but
yeah, well, that's right. If you deal with a lot of data, you love the per foots. But if you're going in onesie twosie, you're talking whole dollars. So yeah, the per foot can be good if you're doing a lot of it. And when I first saw this slide, I was like, no, this can't be right. But it is right. I mean, we're only going back about 5-6 months. And look at where the pricing has come and gone. So we're just about where we were back in October, November.
Right. This chart starts in October 2022. We saw that prices, again, price per square foot will obviously, this will see overall prices fall, but you can just see how it really hit a low right at the end of the year. And then it's right above now where it was in the fall. So showing strength. And I think a lot of real estate agents are seeing that. Buyers who are looking at buying a house are also seeing a lot. This is a confirmation. Yeah. There's a lot of buyers out there.
Now, I would also throw this out too. A lot of people might look at this and be like, oh, well, of course, it's the spring, buying season. I think there was a lot more at play. And it just happens to be, circumstantial that it is going up at the trajectory that it was going during the spring season.
Yeah. And I'm just going to correct myself. There are, as far as historically, there's not a lot of the buyers, but there's a few. There's both. We have low demand and we have low amount of sellers and low amount of buyers out there. Okay. So right now there's not much on the market. But also, yes, we do have lower amounts of buyers, but really right now buyers are driving up prices from those lows. We can see here that this is the median sales price. It's at $427,000. This is the overall Greater Phoenix area. This is just showing all the way back to 2017 what the prices have done in Phoenix. Again, have continued to go up, but really rebounding from that December, January low.
Yeah, almost over 100%, about 100%
from
over those
February. February 2017. Yeah, right. Almost 100% appreciation. Okay, so months of supply. How long, if there were no sellers putting their house on the market, how long would it take the current buyers to purchase up every listing?
Yeah. So every existing listing right now, if we had those and there were nothing new to the market, how long would it take for the current list of buyers to eat all that up?
And right now we're just probably about 1.8 months. And again, it's not a metric that a lot of buyers or sellers think of, but it is something that real estate agents are going to be telling you about. And it's something that's really important is because it tells you how much is available on the supply side, how many homes are out there really? Right.
Yeah. The higher that number is, the better chance you have to probably negotiate. The lower that number is, the lower the chance you have to negotiate. Really what that means.
That's right. And I know that there's all these lines here. The pink line is 2023. Okay. So I know this is probably something we didn't clarify in the beginning, but 2023 is the pink, but this green right here, that is 2022. And the other years are 2021 and 2020. And you can see how low supply.
Yeah.
I'm sorry, there was very low supply and a lot of buyers. And boy, there was only about less than 1 month of supply left.
Yep.
So, okay, we want to talk about seller concessions because seller concessions are going to be something when you're looking to either sell a home in Phoenix or buy a house. It's going to come into play.
Yeah. And well, first off, what is a seller concession?
Yeah.
Are they like selling candy or something?
Seller concession is what a seller agrees to pay a buyer and to basically sell their home. And it's going to be something in the contract. You're going to negotiate, if you're a buyer or seller, negotiate what the seller is going to be paying.
Right.
or
Yeah.
contributing.
You can come to an agreement or a general agreement on the house. Look, we're going to pay you $400,000, $500,000, but we'd also like for you to pay for some closing costs. Well, why would we do that? Well, to help us buy your home, give us more of an incentive.
Right.
That's the concession. The sellers are doing things to help get this deal done.
Exactly. And the concessions can be paid for the buyer's closing costs, their prepaid taxes and insurance, and the interest. It cannot be used for the down payment.
Yeah, boy, the buyers would love for that to happen. Hey, can you give me a $30,000 concession to pay for my down payment?
Right.
That's the one area where the concessions cannot be applied. The lender wants to know you're using your money, not the seller's money.
Yeah. So if the buyer is using cash to purchase your home, it won't be something that they will even think about. But you could, it doesn't matter if it's cash or not, you can contribute, you can negotiate that.
Yeah.
Okay. So we see that 46.1% of all closings in the greater Phoenix area have seller concessions. This is pretty high from historic levels. But again, I think that this chart goes back to 2015, and really we were really in the 30s to almost 40. So we're seeing higher percentages of homes and sellers giving seller concessions.
Yeah. So if you've got, you're talking to your friends and you're talking over dinner and you're talking about houses, I bet you half of them got a concession.
Okay. So these are the top cities here in the greater Phoenix area. And what we're doing is we're showing now the graph before we were showing about 46% of all closings. Well, this is the cities. This is what we look at. This is what it looks like when you look into the cities on a micro level. Avondale has 77% seller concessions on closed deals.
Yep.
Buckeyes at 60%.
Right. And if you start to look through here, you have them Goodyear and Sun City and Tempe kind of in the middle. And on the low side, you've got, Fountain Hills and Anthem and Paradise Valley. And you can deduce a lot from this chart, but in certain parts of the area and the city, sellers are having to give more concessions.
Absolutely. So it tells you where there's buyer strength or seller strength.
Yeah. And what I would say too, is it also has to do with the, how mature the buyer is. A lot of these first-time home buyers, they need those concessions.
Right.
So it doesn't say so much about the city as it might say about the borrower or the buyer needing some help.
Yeah, absolutely. If they're buying your first-time home, primarily in the outskirts, lower median sales price. And
it sure helps to have your closing costs paid for. They're not going to
have a lot of money down in a lot of cases, so they're asking a lot of sellers for contributions. All right. So what we look at right now is the median sales price is $427,000, but the average concession is about $7,000. What that means is the net median sales price is really about $420,000, and you can see these two lines, the orange and the blue, and how they separated in about January of 2023. They kind of hit again. That was where we saw that low in the median sales price and the price per square foot in Phoenix. And that's where we had the greatest disparity between seller concession in that seller concession.
Another way of looking at this chart real quick is, sellers are, giving almost 2% in a concession in order to sell their home today. A little bit less than that.
Right. Good. I didn't think about it that way. Yeah, you got almost 2%. And think about that 7,000 should cover all your closing costs and then sometimes prepaid taxes and insurance. Mm-hmm. Okay, so what we're also going to show is, again, we're going to go really quick here through this, the 13 cities, what mortgage payments look like in each of these cities based off of their median sales price.
Yeah, what a difference. Look at those cities.
Absolutely.
Well, I guess Scottsdale stands out, but.
Yeah, so Phoenix, these are the median sales prices right here on this column. You can always just pause this and look at these. We're basing this off of 25% down. The interest rate, today's interest rate for good borrowers, but the point is not so much to focus on the interest rate here, but the payments, the taxes, the homeowner's insurance, what a lot of buyers are out there paying. So I wanted to show you that. And again, it's here's Peoria, Queen Creek, Buckeye, Casa Grande, Tempe, Goodyear, and Santan Valley.
So basically something in the low 2000s is getting you a good median home.
Yes, that's right. Okay, so here's another visual, probably a better way to look at what the payments are. So we're taking those same payments, putting them on this chart, Phoenix, Scottsdale, Mesa, Surprise, Chandler, all the way through. and you'll see the payments. But look, you can see that Scottsdale, based off of the median sales price, the average payment today, someone putting 25% down would be $4,000. And then Casa Grande, about $1,700 payments.
And again, you remember, this is only because of the value of the home itself. It's not higher interest rates or, higher, private mortgage insurance or anything. It's just simply going off of what that sales prices of the house.
Right. So this is what the average taxes would be on these properties, at that median sales price. Again, just giving you an idea of how in each city what those taxes look like. Look like they range from $160 a month up to $366 a month.
Yeah, and people say, well, who cares about taxes? We pay them every year, and they are what they are. Well, a lot of people coming from out of state will call and ask, hey, what are your taxes? Are they 1% of the value of the home? This in a snapshot can kind of tell you, is there a big difference? Okay, if I am buying a home now, this is on a basis of the home value. So I guess to actually look at this chart, you'd probably want to carve a few things out to see which cities are actually more affordable on a net basis.
Right.
If you're to strip out, the higher price of the home.
Right. I mean, yeah. So these cities, of course, these are the median sales prices affecting these graphs. But yeah, it's just something. Each city is going to have very similar taxes as far as a percentage. Some will have, like Paradise Valley has a very low taxes because they really don't have a lot of services that the city government does.
Likewise, there are parts in older town of Phoenix where they have the irrigated lots and they have certain facilities that they're paying for, and their taxes can surprise you.
Yeah.
So it is something to look at. Don't overly worry, but this is a really cool chart.
So homeowners insurance. Same idea here. This is what the average insurance that you should be paying if you're buying a house, the median sales price in each of the city. Again, this is the per month homeowners insurance. Okay, inflation numbers. A lot of people may not really care about inflation, but I think some of you do, right? And some of you are really wanting to know how inflation affects interest rates in the overall market. But we're just going to be talking about interest rates right now. Just going to go right through it.
I'll tell you what, people are talking about inflation today because it's affecting their 401ks.
Yeah.
So people are talking about it. So hopefully you like this information.
So we have two different inflation numbers, and they have core inflation and then just the general inflation. Core inflation looks at inflation without food or energy. Okay?
Which are two huge.
So that's
huge categories.
So gas, it's basically gas, oil, and food out of the equation. With core inflation, we saw it last month at 5.5%, and then just on Wednesday, it was reported at 5.6%. So slightly higher.
It just ticked up. Yep. Yeah, and they were forecasting it to be the same, but I will tell you what, the market was really hoping for something a little bit less. Mm-hmm. So it came in a little bit higher, which was not great news for us.
Right. And then overall inflation with everything, we see that it went from 6% to 5%.
So that was good.
Yes.
That's a big movement.
Yeah, big movement there. And then how this is now, this is the 10-year bond. Now, this is not interest rate. This is not a 30-year fix, but the 30-year fix rates are looking at every moment what the 10-year yield is doing.
Right. Yeah, the 10 years like the bigger brother. What is the bigger brother doing? That's what we're going to do.
Yeah. So all the Wall Street guys, all the banks are looking at the 10-year going, what is the 10-year doing? And right now, what we're seeing is that in November of 2022, it peaked. And it's what we call there's a channel that started with that peak. And then around the turn of the year, the rates came down. So if you were to look at the 10-year yield and 30-year fix, they are going to be very similar movements, identical movements.
And also if you're looking at interest rates, you're like, why are they moving so much? Look at this chart. Again, they are moving. Yeah. Interest rates can be coming down at the same time while they can be going up, meaning they're coming down in the channel, but they're still going up in interweek and intermonth periods.
Yeah, and so just in early March, rates were hit a high, and then they've been coming down. And again, lots of volatility. If you have questions on your scenario for either a home purchase, maybe you're selling a house, you're thinking about buying a house, or you're a buyer, you're looking to buy right now, or to refinance, to take cash out, or whatever your plans are, be sure to contact us. We'd be happy to help. And be sure to subscribe and comment and like.
All right. And give us a call too, folks.
Take care.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.